Assalamualaikum warahmatullahi wabarakatuh. My name is ILYANA binti MARJUKI. My matrix number is 20247456117. Today, I will be presenting a short-term technical analysis on Sarawak Oil Palm Berhad, also known as SOP. SOP is a plantation company listed on the main market of Bursa Malaysia under the stock code 5126. The company is actively involved in the cultivation of oil palm and the production of crude palm oil and palm kernel oil. SOP operates mainly in Sarawak and has integrated facilities including plantations, mills, and refineries. Now, let's move on to the company's stock performance. As of the latest data on 4 July 2025, the stock is trading at 3 ringgit 12 cents per share with a 52-week price range between 2 ringgit 80 cents and 3 ringgit 50 cents. SOP's stock price is influenced by several external factors, most importantly the global palm oil market, commodity demand from major importers like China and India, and investor sentiment tied to agricultural performance. Looking at growth opportunities, SOP is investing in downstream processing, technology adoption, and operational efficiency. This could increase profitability and reduce long-term costs. However, there are also risks such as palm oil price volatility, EU regulatory pressure, and labor shortage. Despite these challenges, SOP's consistent dividend payouts and strong fundamentals make it attractive to long-term conservative investors. The rate of change ROC is at 0.00, which reflects neutral momentum over the last 9 trading days. It supports the idea that SOP is currently in a consolidation phase. Traders should wait for a positive ROC breakout before entering. For Relative Strength Index or RSI, as of 3 July, SOP's RSI is at 55.45. This is in the neutral zone, indicating that the stock is not overbought or even oversold. Since it is closer to the midpoint, there is still room for the price to increase. It is also worth noting that in April, the RSI dipped below 30, showing an oversold condition, and after that, the stock began to recover. And this shows that RSI can be useful in identifying good entry points for buyers like us. For the MACD histogram, it is slightly negative, showing that the MACD line is below the signal line. This indicates weak bearish momentum and no buy signal has appeared yet. From a buyer's perspective, it is better to wait for a bullish crossover in MACD to confirm an entry point. Moving on to the stochastic oscillator, another momentum indicator. The percentage K line is currently at 58.33 and the percentage D line is at 55.56. These values are also in the neutral zone, but we can observe a recent crossover where the percentage K line moves above the percentage D. This crossover is generally seen as a bullish signal, meaning the stock might rise in the short term. Historically, SOP stock has rebounded after similar signals, especially when the stochastic was near 20. As buyers, this indicator supports the idea that now could be a good time to enter the market before the next price increase. Based on the full set of technical indicators I use, the best decision for now is to hold the SOP stock. Out of all the indicators, 5 suggest a hold and none recommend a clear buy or sell. This tells me that the market is still in a neutral sideways phase with no strong trend direction. With SOP trading at 3 ringgit 12 cents as of 4 July 2025, I have set a target profit at 3 ringgit 50 cents, which is the next major resistance level. Meanwhile, the stop loss is placed at 2 ringgit 80 cents as strong historical support zone. This setup gives me a risk-reward ratio of around 2 to 1, which is a balanced and disciplined approach to managing trades. Personally, I'm a cautious trader. I don't rush into a position without confirmation. Since the volume is still low and most indicators like the RSI, envelope, and moving average show neutral or sideways movement, I prefer to hold for now. I will closely monitor for a breakout or an increase in volume before making my next move.
Assalamualaikum and salam sejahtera. My name is FARIHAH AMIN with matrix number 20247666969, and I will be presenting on the stock that I've chosen for our portfolio, which is Hong Leong Bank Berhad. Hong Leong Bank Berhad or HL Bank is one of the well-established banks in Malaysia and has been serving customers for over a century since its founding in 1995. It is part of the larger Hong Leong Group. For over the years, it has grown to offer a wide range of services from personal and business banking to Islamic banking, loans, investment, and even wealth management. The bank is listed on Bursa Malaysia and holds a strong presence not just locally but also regionally, with branches and operations in countries like Singapore, Vietnam, Cambodia, and China. Moreover, as for the company's stock summary, Hong Leong Bank Berhad is listed on the main market of Bursa Malaysia under the stock code of 5819, with the stock symbol of HL Bank. As one of the major banking stocks on the exchange, it is also part of the FBMKLCI index, which tracks the performance of the top 30 companies in Malaysia by market capitalization. HL Bank is considered a blue chip stock known for its stable earnings and consistent dividend payouts, making it popular among long-term investors and institutional funds. The rate of change indicator measures the percentage change in price over a specific period. As of July 4, 2025, the 9-day ROC for HL Bank is calculated at approximately 0.92, suggesting a slightly positive momentum in the short term. This modest value reflects a minor price gain over the past 9 trading days and points toward a market that is inching upward but without strong conviction. Looking back over the past few months, HL Bank's ROC has mostly remained within a narrow band near the zero line, with occasional upward spikes during brief rallies. These movements typically coincided with mild price recoveries, particularly following dips below RM 19.66. For traders, this neutral to mildly positive ROC suggests that while there is currently no strong buy signal, the presence of slight upward momentum and the absence of any negative divergence are still favorable. A more compelling entry signal would occur if the ROC rises more significantly above the zero line in the tandem with the price breaking above short-term resistance levels. Next, moving on to the RSI. The Relative Strength Index RSI is a momentum oscillator that measures the speed and change of price movements over a given period, commonly 14 days. As of July 4, 2025, the 14-day RSI for Hong Leong Bank Berhad (HL Bank) is positioned at approximately 51.13, indicating a neutral to mildly bullish condition. This reading suggests that HL Bank is neither overbought nor oversold, but shows a slight upward momentum in the short term. Over the past few weeks, the RSI has mostly hovered between the 50 to 60 range, reflecting a steady but cautious market tone. This mid-range behavior aligns with the stock's sideways price movement around RM 1960 to RM 1970 level. The current RSI reading at 51.13 supports a watch and react strategy. While the indicator does not yet provide a firm buy signal, it also shows no signs of weakness. Continued climb in RSI above 60, especially if accompanied by a breakout in price above 21.12, could indicate renewed bullish momentum and a potential entry opportunity. Until then, the RSI reflects a stable market environment with room for upside, offering a favorable setup for traders monitoring for a near-term breakout. Overall result of my technical analysis is the best option for Hong Leong Bank Berhad HL Bank at the current moment is to hold the position. Out of the indicators applied, namely RSI, MACD, stochastic, rate of change, all are signaling a neutral to mildly bullish outlook, but none are providing a clear buy or sell signal. This indicates that the stock is currently in consolidation phase with limited volatility and no strong directional momentum. At the current price of stock of RM 19 ringgit 66 cent as of 4 July 2025, there is no indication of imminent breakout or breakdown. Based on historical price action and resistance zones, I would set a target profit at around RM 20 ringgit 50 cent, which aligns with the next resistance level. To manage downside risk, I would place a stop loss at RM 19.20 cent.
Assalamualaikum to Dr. Ahmad Fauzi. My name is BINTI TORRANCE. My student ID is 2023272898. Today I will present about stock IHH Healthcare Berhad. IHH Healthcare Berhad is a top private healthcare group in Malaysia, managing hospitals like Gleneagles, Pantai and Prince Court. IHH is listed on Bursa Malaysia under the code 5225 and is also part of the FTSE Bursa Malaysia KLCI Index. Their mission is to touch, live and transform care. For the company stock summary, IHH Healthcare is a big healthcare company in Asia. It's worth around RM 59.6 billion and has low risk based on its beta. The company makes strong profit with RM 24.4 billion in revenue. With its PE ratio, earnings and steady dividend, it's a stable choice for long-term investor. Starting with the rate of change, we can see that IHH Healthcare has a recent value of negative 1.46%, which point to negative short-term momentum. This means the price is currently moving lower compared to 9 periods ago. However, there was a sharp drop around March 2025, and since then, the price hasn't fully recovered to early heights. Moving on to the RSI, or Relative Strength Index, the current value is 43.15, which is below the natural mark of 15. This tells us that buying momentum is weak, but not yet in oversold state. Early in the year, the RSI reached an overbought peak of 84.84, but it has remained mostly between 30 and 17 since then. This suggests that the stock is currently moving sideways and is in a natural or consolidating phase. Looking at the MACD, we can see that the current MACD line is negative 0.031 and the signal line is negative 0.033. Both lines are positioned below the zero level, which signal a bearish bias, but not a very strong one. There has not been a clear crossover, so momentum remains weak and uncertain. For the stochastic oscillator, the K line is at 47.06, while the D line is at 63.40. This indicates the stock is trading in a natural zone with no sign of overbought or oversold condition. However, the K line has crossed below the D line, which can be an early sign of bearish momentum. Overall, the stock is trading sideways without major volatility at this stage. Based on the combined technical analysis, currently IHH Healthcare Berhad is trading at RM 6.75, below key moving average. It's a sign of weakness but not a breakdown. Support is holding at RM 6.50 with a mild rebound, while RSI and stochastic show low momentum but not enough to call it oversold. The price is near the lower envelope band, suggesting consolidation rather than strong downtrend. Overall, there is no strong buy or sell signal, so the recommendation for now is to hold and monitor closely for a breakdown above RM 6.90 or breakdown below RM 6.50.
My name is JUAINAH binti JUMRIN. I will continue by introducing Precious Metal Aluminium Holdings Berhad. Metal is the largest producer of flat roll products made of aluminium, leading manufacturers in the Southeast Asia region. The company was incorporated in 1986 and has developed to be one vertically integrated aluminium powerhouse. Metal has a large service industry based through the use of its smelting plants in Sarawak and its different advanced plants in extruding firm in Malaysia to provide consultations to the construction industry, automobile sector, packing sector, and the source energy sector. With the stock code of 8869, the company is listed in the main market of the Bursa Malaysia, can be regarded as one that has a strong presence in the Malaysian capital market because they are also a constituent of the FBM KLCI Index. Since Metal stock has good fundamentals, export-oriented revenue structure as well as a strategic location on the global aluminium supply chain, in the case of the latter, investors always follow it. It's one of the most actively traded stocks on Bursa Malaysia and is included in the FBM KLCI Index. Metal's share price typically follows global aluminium prices and export demand. making it attractive to both institutional and retail investors. As of early July 2025, the stock trends around 5.30 ringgit Malaysia with key technical levels at 5 ringgit Malaysia for support and 5.38 ringgit Malaysia for resistance. If it breaks higher, it may test 5.50 ringgit Malaysia to 5.70 ringgit Malaysia, while falling below 5 ringgit Malaysia could signal short-term weakness. Despite price fluctuations, its strong fundamentals, export growth, and industrial performance make it a solid long-term prospect. It's one of the most actively traded stocks on Bursa Malaysia and is included in the FBM KLCI index. Bimetal's share price typically follows global aluminium prices and export demand, making it attractive to both institutional and retail investors. As of early July 2025, the stock trends around 5.30 ringgit Malaysia with key technical levels at 5 ringgit Malaysia for support and 5.38 ringgit Malaysia for resistance. If it breaks higher, it may test 5.50 ringgit Malaysia to 5.70 ringgit Malaysia, while falling below 5 ringgit Malaysia could signal short-term weakness. Despite price fluctuations, its strong fundamentals, export growth, and industrial performance make it a solid long-term prospect. The RSI, or Relative Strength Index, is a momentum indicator that measures the speed and change of price movements over a 14-day period, ranging from 0 to 100. It helps identify whether a stock is overbought or oversold. Generally, a reading above 70 signals overbought conditions, while below 30 suggests oversold. Currently, Bimetal's RSI stands at 68.18, which is close to the overbought threshold, reflecting increasing bullish momentum. This bullishness is supported by the RSI line crossing above its moving average, around 53.70, which signals strength in the current trend. This is further confirmed by rising trading volume, indicating stronger investor interest. Although the RSI suggests a healthy uptrend, traders should stay cautious if it crosses 70 and start to flatten or turn down, as that may point to price exhaustion. For now, as long as RSI holds between 60 and 70 and rises steadily, the uptrend remains sustainable. The rate of change, or ROC, measures the percentage change in price over a set period. In this case, 9 trading days. Currently, Bimetal's ROC stands at positive 8.61, meaning the stock price has increased by 8.61% from 9 days ago. A positive and rising ROC indicates strengthening bullish momentum. This recent uptick began around mid-June 2025 when the price broke above the 5.20 ringgit Malaysia resistance level. Historically, when Bimetal's ROC moves above the positive 5 to positive 10 range, it often results in a short-term rally. However, this strong move can be followed by brief pullbacks once momentum slows. At present, the ROC suggests that Bimetal remains in a bullish phase, supported by investor interest. But if the ROC starts to fall while prices are still climbing, it could hint at a loss of momentum or upcoming consolidation. Overall, the ROC confirms a strong uptrend, though traders should remain alert for signs of reversal. To conclude the analysis, a summary of 6 technical indicators shows that Bimetal is currently in a bullish phase. Support and resistance levels suggest further upside potential, volume is rising, and bullish candlestick patterns confirm the breakout. However, momentum indicators like the RSI and stochastic oscillator are nearing overbought territory, indicating a need for caution. With the current price around 5.30 ringgit Malaysia, the recommended strategy is to hold with a bullish bias. The take profit level is estimated at 5.60 ringgit Malaysia, which aligns with historical highs and the upper band of the envelope indicator. A stop loss can be set around 5 ringgit Malaysia, offering a risk-reward ratio of about 3 to 1. A prudent approach is to monitor the next few candles. A breakout above 5.30 Malaysia with strong volume could confirm continuation, while a healthy pullback to the 5.10 to 5 Malaysia range may provide a re-entry opportunity. Overall, P-metal remains technically strong, but traders should stay alert for any reversal signs.
Good morning everyone. Today I will be discussing AZLIA X Berhad or AAX, which is part of Capital A Berhad and listed on Bursa Malaysia. While primarily known as low-cost airline, the company has a strategically diversified into various digital and travel-related businesses. AZLIA Berhad trades under the ticker Capital A. It's primarily in the travel and leisure sector, but has a strategically diversified into areas like logistics and fintech. This diversification is key because it aims to make the company more stable and less reliant solely on the volatile airline industry, especially after the pandemic. This shift could influence how investors view the stock in the future. First, let's look at the Relative Strength Index or RSI. This indicator helps us understand if the stock is being bought or sold too aggressively. For AZLIA X Berhad, the RSI is currently at 44.42. This is right in the middle, indicating the neutral momentum, meaning there is not any extreme buying or selling pressure on the stock at this moment. Next, we will examine Bollinger Bands. This indicator helps us understand how volatile the price is and where potential turning point might be. For AAX, the current price of RM1.62 is right on the middle line of the Bollinger Band. The upper band is around RM1.76 and the lower band is around RM1.50. This tells us that the price is currently consolidating around its average. The bands are moderately wide, suggesting some volatility, but the price is not hitting any extreme levels, reinforcing the idea of the sideways movement. My technical analysis suggests a hold position for AZLIA X Berhad. All indicators point to a neutral consolidating market with no clear buy or selling signals. The current price of AAX is RM1.62. My short-term target profit is RM1.80 with a stop loss at RM1.50, offering a favorable risk-reward ratio of 1 to 1.8. As a cautious trader, I will continue to hold and monitor for decisive breakout or breakdown, ideally with increased trading volume before making further decisions.
In conclusion, this portfolio brings together 5 very different but complementary stocks, which are Hong Leong Bank, AZLIA, Sarawak Oil Palms, Press Metal, and IHH Healthcare. Hong Leong Bank and IHH provide a solid foundation with their stability and defensive nature, ideal for riding out market uncertainty. On the other hand, AZLIA and Press Metal offer growth potential, especially when the economy is picking up, while Sarawak Oil Palms adds a nice layer of protection against inflation through exposure to commodities. What makes this combination powerful is how well these stocks balance each other. This is because some are steady and reliable, while others can capture gains during recovery or growth phases. By mixing defensive and cyclical sectors, this portfolio gives you both peace of mind and room for upside, making it a smart, well-rounded strategy. That is all from us in our group portfolio. Thank you.